Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. To start things off, Raoul Pal, the CEO of the Global Macro Investor and former Goldman Sachs fund member, thinks Bitcoin is the call option on global central bank uncertainty, and he says hedge funds are noticing. Pal recently joined Galaxy Digital CEO Mike Novogratz on the Unchained podcast. For those of you who've been looking for a crypto podcast, this is actually a pretty good one. It's a little, I don't want to use the word dry. It's not what you would normally expect from a podcast, but it's actually pretty informative to discuss Bitcoin's role amidst all of the global economic issues caused by 19 and various government responses to it. Pal says now that the fragilities of the international financial system are so visible. He's been getting calls and emails from hedge fund investors every day inquiring how they can invest in Bitcoin. He said, "We've never seen or never gone through such central bank uncertainty. None of us have lived through money printing of this kind of magnitude. In fact, none of us even believed it would ever happen." So when you got something that is so large and it continues, it doesn't go away, it gets worse and worse and worse, everyone has to ask the question, well, what could it mean? And Bitcoin is the call option on the what could it mean? And it's as simple as that. So in a big portfolio, a very little bet could end up being a very big thing if someone at the central bank level, i.e. fiat currency, comes into a larger problem. So this is one of many, just, talking about this fact right here, this is one of many times that we've heard from another fund manager, Goldman Sachs, something, what have you, who's mentioned that him and other friends are deeply into Bitcoin or starting to get into Bitcoin or into the cryptocurrency space. This is why the frustration I think a lot of people have right now when it comes to the stock market. I don't know if you've seen, I think about a day or two ago, I think the stock market dipped a tiny bit and then went up on optimism for the estimates of what could be people potentially returning back to work when jobless figures are still higher than we've ever seen in the history, literally of ever, not even over exaggerating. We've never ever seen numbers this high, and they're probably not going to go down much lower anytime soon, especially if you've been paying attention. This is kind of a side eye thing that's been going on where a lot of companies have announced the to prevent things like this happening once again, the roboticizing of their the word is in management of their factories and stuff like that, and making sure that they cut costs. And cut costs, for those of you who don't know, always means firing people. Whenever you hear a company go on TV and they say that they're going to cut costs and then their stock rises, it's because they mean that they're going to hire less people and or fire tons of people, and usually start using robots to take the place of the workers. And at the same exact time, because of 19 and everything that comes with it, what have you, and the markets haven't fully recovered or haven't recovered as much as people believe, because we are still relatively close to the all-time highs that we had before all of this took place, when all of this is still currently taking place, which logically does not make a lot of sense. Governments around the world are still printing more money. There's still the idea that the US is going to print even more money in order to send out new stimulus packages and or other, whatever the actual case might be, but this is all going to add up into trillions of dollars that's being printed by governments around the world to try and mitigate a slight portion of what's been going on, even though none of it's working, because once again, the numbers that we had before is that a lot of the stock markets around the world were simply rising because of, because of tech stocks. That was mainly one of the only things that were really doing well. I'm sure if you type in bankrupt and 19 or some, combination of words, a lot of companies have been filing for bankruptcy or have been asking the government, pleading, please, can we have around $50 billion? And it's what is wrong with all of you? That you didn't have not only nothing in reserve, but that the system is so weak that it was supposed to continue running forever. Imagine if 19 had never happened. The idea is that the machine would continue moving forever. You would continue to take out debt. You would continue to ask for money or borrow money or get money or spend money. The loop just can't continue forever. And that's where we are. Both Pal and Novogratz stress the impact millennials and Gen Z could have on Bitcoin and how it's viewed by the mainstream population going forward. Pal, who has predicted Bitcoin could soar to 1 million, says that aside from crypto, millennials have essentially none of the high return investment opportunities that so many boomers had throughout their lifetimes. This is also a common thing going on when you look at the actual rate of inflation and the rate of paychecks since the 1970s. Not much has really changed. People are making a slight bit more. That's only because they have to give more. I promise you, if employers could give less and people were able to just scrape by, they'd be able to do so. But people get angry. Anyway, yeah, we keep getting calls like this. It's fairly obvious that the system isn't working, is not correct, is not right. I mean, we'll see exactly what this all translates into. There we go. As we move forward, but I'm not surprised that there are tons of hedge fund managers and rich people who are contacting each other trying to figure out how to get out of the mud before everyone else even realizes that they're knee deep in mud. Anyway, that's the that news, and let's move on. In very popular news, the Deutsche Börse has listed an exchange-traded product, that's an ETP, that tracks the value of Bitcoin. 21 Shares, a Swiss-based product provider formerly known as Amun, says its Bitcoin ETP has been officially accepted Wednesday to list on Extra. I have no idea how to actually really pronounce this. I would say Extra. Deutsche Börse's electronic trading venue. They said the listing on Extra not only strengthens our current position in Germany, but also opens up institutional grade crypto products to the wider European and institutional markets. Deutsche Börse's group has two trading venues. It's Extra and the Frankfurt Stock Exchange. Together, they count as the third largest trading platform in Europe, just behind the London Stock Exchange and Euronext. Deutsche Börse's data shows that more than $150 billion worth of euros worth of equities and derivatives products change hands at Extra in May. Bitcoin's ETP provides exposure to Bitcoin in a regulated asset class, in contrast to the United States, where regulators have been loath to sign off on Bitcoin ETF applications. There are already 3 to 4 entities offering crypto-backed products across Europe because it's not the end of the world. The reasoning that we had from many people in the SEC and other people who told us that current government leaders did not want a Bitcoin ETP is because that it would accelerate the market too much for the same exact reason why they pushed through the Bitcoin futures. It was to slow down the Bitcoin market. So the idea has always been that if we do get an ETF for Bitcoin, that Bitcoin's price will skyrocket because it will be the U.S. government giving a hat nod, a tip nod, whatever, tipping their hat towards Bitcoin, saying, yes, this is okay, so and so and so, which still doesn't make a lot of sense why people would still... Why do you need government approval to be able to say that Bitcoin is worth it or can go up in value? I lack understanding in the entirety of this discussion. Anyway, yeah, very popular news because I guess, the US won't do it and Germany and Switzerland keep doing it. And it says right here, Coinbase Custody will act as the digital asset custodian of the fund. No real numbers on how much they plan on raising. I assume it's going to be over 100 million. I doubt that a Bitcoin ETP or an ETF in any country is going to be around $12 million, just logically speaking. Anyway, yeah, this is incredibly popular news. We'll see how it goes on. And I assume by the end of this year, we will probably have 2 to 3 more of these. Just logically speaking, I assume many of them are actually in the works. It's just about being approved. But yet again, this is more Bitcoin that's being absorbed by the already rich. And that's going to create an interesting future when people figure out what Bitcoin is a bit too late. Next up, the Swiss government is looking to relax crypto regulations further as an attempt to foster industry growth and encourage more startups to set up their establishments in the Alpine region. The National Council of Switzerland, which is the larger of the two federal assembly houses, has unanimously agreed on a bill that proposes changing a few crypto regulations to fit better the evolving times and needs and support growing business growth. Crypto business growth in the region. With this, the Swiss regulatory officials are doing their best to minimize the legal hurdles and reiterate their position as a pro-crypto nation. Can you imagine your country unanimously deciding that they have to change crypto regulations because they want to make more money? Which logically makes so much sense. This is why I sit here confused many times, because it's clear that this industry is going to continue growing. Nobody knows directly in which direction it's going to be going, but it's clear that it's here to stay as governments have taken a liking to DLT and blockchain, but also the countries who know how to make money have all announced, Bitcoin's fine, Bitcoin's totally okay, or have given it some type of a legal stamp of approval. Last month, cryptocurrency exchange Kraken made it known its intentions to strengthen association with this thriving fintech hub of Europe and ascertained its vision to become an active part of the crypto adoption journey. The Bitcoin Association Switzerland, the largest crypto community in Switzerland, also registered itself successfully as a nonprofit in May, becoming an exemplar of the country's friendly crypto regulation. Switzerland is also known for its long-standing association with blockchain technology, with the city of Zug acting as a popular hotspot for launching token-based projects during the crypto boom of 2017. That's wonderful. I wish this happened all over the place. I don't know what the tax rate for crypto is in Switzerland, but, making it easier for other companies to go into your country, which allows then people in your country to continue to make more money, and just kind of, it's a money loop. Good job, Switzerland. Good job, Germany. Who else is there? Was it Sweden? I don't think we've had much Sweden crypto news. Thank you to all the European countries who really get it. Thank you to the tobacco shops in France, because logic. Anyway, that's the Switzerland news. I guess European news over here. And let's move on. Popular Bitcoin exchange OKEX has announced the listing of the COMP token, the governance token of the algorithmic decentralized finance protocol known as Compound. According to an announcement OKEX published, spot trading of COMP against Tether and Bitcoin opened up on the 29th of June. COMP deposits have been available since 5 a.m., with withdrawals being open 3 hours earlier. Compound, for those completely out of the loop because most people just heard about this about 6 days ago, is a decentralized protocol launched in 2017 by Robert Leshner and Geoff Hayes. It lets users borrow and lend cryptocurrencies in peer-to-peer transactions. Those who borrow need collateral to do so and must repay the funds with interest, while those who lend receive interest on their holdings. Logical. Rates on Compound are determined by the market and change over time, along with the amounts being lent and borrowed. Since its launch, Compound has grown to become a leading DeFi protocol with over $1 billion worth of assets locked into it. There's that little chart right there. Many platforms have started to list Compound in mass very quickly, immediately after Coinbase announced that they were going to do so, which is really funny that they didn't do so before, but the fact that they're all doing it now shows that everyone is trying to trail behind Coinbase in some sort of way. Tying directly into this news, we have this. Compound users have voted to change the rules around the distribution of the platform's COMP token, which will ensure that markets are more evenly utilized. This change is part of Compound's governance protocol number 11. Compound allows users to earn interest by locking up their cryptocurrency in specific markets. This is partially determined by Compound's governance token known as COMP, which went live last month. Until now, COMP was allocated to different markets based on how much interest each paid, which naturally drove users to join certain markets en masse. From now on, COMP will be distributed based on borrowing values rather than interest rates. This will split the 50-50 between lenders and borrowers. The change is necessary because the platform's governance token gained value more rapidly than expected. Wow, according to developer Ariane Greenberg. Due to rising token prices, some markets have grown excessively large. Wow, you don't say. For example, Compound's BAT market has over $319 million worth of BAT. That amount is so large that it could provide Compound prevent Compound from liquidating the market if it needed to do so. Wow, this is all very big news to me. Under the new rules, users will be incentivized to move out of high interest markets. Greenberg predicts that interest rates will almost equalize between different markets. The new change will also reduce the risks of flash loans, large cryptocurrency loans that are not backed by collateral but are paid back almost instantly. So, there's been a lot of, I don't know if you guys have heard of this, yield farming frenzy. This has been a very big thing the last couple of days, weeks now. Pretty sure a lot of you notice. A lot of people have become fatigued with the real lack of movement within the cryptocurrency market, and people are trying to figure out the best ways to be able to get some type of mega returns that people assumed we would have gotten by now. We would have gotten? Yes, that's English. By this point, we've had a lot of calls for a rapid rise up in price, and Bitcoin's price, and XRP's price, and Ethereum's price, and this coin's price, and yada, yada, yada. However, the news that we have received is that 19 has put a damper on a large part of that. So, a lot of people have been looking how to make money elsewhere, and a lot of people have been dumping their money into these DeFi protocols, coins, proposals, in an attempt to make skyrocketing returns over a very short period of time. However, it's I don't want to use the word, it's not ruining the ecosystem. However, it's too much too soon, and a lot of these coins can't really take it, if you will. So yeah, even like before I started this video, I think Compound's value had gone down, and the other coins that had not been touched and their protocols had not been changed or voted on have all started shooting up in price because people are looking for the easiest ways or places to be able to make money. Anyway, yeah, I mentioned all of this before. Just please pay attention. I hope more people listen now to where you put your money. A lot of people keep putting their money into anything that they see skyrocketing, not realizing that a lot of these, they're not pump and dumps, but they're pumping because people are looking for very easy ways to make money. And then the moment something changes overnight, something is, voted on or dumped or whatever the case might be, the value of that goes down while you're sleeping. And then you're like, oh, I should never put my money into that brand new thing that I heard about 2 weeks ago. Anyway, that's the Compound news. I assume Compound is going to remain popular. I don't think this is it for Compound or many of the other DeFi protocols. I think relatively, and I want to, and I'll use the phrase, they're here to stay very lightly, because for all we know, there could be some other DeFi token that ends up popping up and everyone's like, oh, I like that one a lot more. But I think DeFi as a mechanism will be around for a while. It is the new ICO, and as ICOs were able to be stamped out by the SEC, as long as you're decentralized and you're running on a smart contract platform that can't really be stopped by any governing party except for the voters within the entirety of the network, I think this will continue to flourish, which will then lead us into a very interesting world when all these coins are locked up because people are trying to make that money. Anyway, that's the Compound news. And without further ado, let's move on. Next up, Lebanon's national currency continues to shed value amid the country's deepening monetary crisis, with unofficial reports indicating that the Lebanese pound, or lira, has lost 50% of its purchasing power in less than 2 weeks. On the 2nd of July, local crypto advocate Saifadan Amus, author of the Bitcoin Standard, took to Twitter to assert that after having lost half its value in less than 10 days, the Lebanese lira is now worth 1 Satoshi. Comprising a historic low for the currency, it is roughly, that's a lot of zeros and then barely nothing. On the 21st of June, Amus noted that 10 years ago, 1 Lebanese lira was worth 0.67 Bitcoin. Things like that make me so sad because it's like, imagine 10 years ago, you took 10 of them, and I mean, you can do the math. It's Bitcoin. He said, imagine spending 45 minutes explaining Bitcoin to a group of Lebanese people and then having one of them ask, but without a central bank regulating, what guarantees Bitcoin's value? I assume this is a discussion that we've all had before at some point, trying to explain to other people what Bitcoin is and how it works. And usually one of the things that I have gotten before is what gives Bitcoin value. And one of the other really weird ones that I used to get is someone used to say, if there's a Bitcoin ATM or a Bitcoin whatever, you can put your money into it and you get Bitcoin back, what happens to that fiat? And the news is it just kind of goes back into circulation. And they go, well, what happens to the Bitcoin? And it goes, well, Bitcoin supply gets lower because I now have more Bitcoin than I did before, and there's only 21 million. This is it sounds simple to us, but this is a very big conundrum for a lot of people out there because they're used to like a not a one-to-one swap, but they're not used to a currency that can't be continuously printed over and over. So there's always confusion. It's hard to confirm the precise exchange rate as Lebanon's lira has officially been valued at that's a lot of zeros, 0.00066 since 1997. Having chronic economic mismanagement has led to the emergence of a parallel economy for the currency. Reports indicate that it has seen its value plummet 86% in roughly 1 year. Don't they? I'm not from here, but I remember reading before. I think they also use the US dollar as an actual means of payment within the country. I remember hearing this before because it's more stable than their normal currency. The accelerating crisis has crippled daily life in Lebanon, with the country now preparing for a wave of immigration as it prepares to open its airport following 19 restrictions. They says we're like prisoners with nothing to do but try to plot our escape. It's gonna get real very fast. This happens all the time. Not Lebanon in particular, but this one moment is for Lebanon because every year we keep hearing that there are multiple countries that are going through things like this. Not even slight mismanagement, it's complete government greed. Trying to figure out ways. The government takes out debt on their own behalf. They make tons of money. None of that money falls into the hands of the public. The government continues to mismanage the money. They freeze bank accounts and tell everyone, oh yeah, sorry, we need to take your money from your bank accounts to be able to pay back our debts, which is exactly what happened. It's weird because I feel like, how do I say this in the really nicest way? I feel like so many governments and countries that would benefit from Bitcoin early on don't see the true face of their government in the beginning. And what ends up happening is they trust their government for too long. Things like this end up happening. And then when it's time for them to actually, even before, try to get into Bitcoin, they can't because they don't have any money. Like, I think they're allowed to take out $100 per month now from the actual bank. If you haven't seen the destruction, people have destroyed their banks out of pure anger. But it's this kind of situation that so many other countries right now are also going through extreme levels of corruption. But the issue is that they don't, the people in the country don't see the corruption because they think that they're doing well. Well, I'm getting my paycheck, I'm getting so and so, I have food on my table. There's clearly nothing wrong. People don't like the opposition and therefore something's wrong with them. But you kind of sit there and go, anyway. So it's these countries over the next couple of years that will also help to fuel the Bitcoin train. Because everyone thinks it can never happen to me until it does. And then at that point you go, oh, I wish I had bought Bitcoin 10 years ago as opposed to now when I can't really buy it because I only have, can you imagine only having 100 per month? What do you do? And your currency keeps losing value. So, it sucks because the people who kind of need it the most get it the last. We have hedge funds who are buying up tens of thousands of Bitcoin all the time. Grayscale buying up massive portions every single day when they don't really need it. And it's other people around the world who would benefit the most from it. But, yeah. Anyway, that's that news. It's going to continue to happen. I don't think there's going to be a moment tomorrow where banks kind of get it together. Or the bank in this country goes, wait. Should we care about our citizens? Okay, yeah. Let's do the right thing. I know it's not going to happen. Anyway, let's move on. And to finish things off, and the most obvious news that we've probably ever had, the American Bankers Association, a private consortium of American banks, logically, said in a testimony at a U.S. FinTech task force hearing earlier this month that a central bank digital currency puts an uncomfortable amount of power in the hands of the Federal Reserve. Wow. A Fed-run digital currency would be just that. It implicates social values and privacy. It wrote in a June 11th statement. But other testimonies provided to a Senate committee hearing today disagreed. Of course they would. A central bank digital currency is currency that is minted and distributed by a central bank. Also, this is very logical news. Some designs for central bank digital currencies use blockchains, but others will not rely on blockchains at all. The ABA said that it does not want to let the Federal Reserve create a digital dollar. Its reasoning, extended beyond the obvious that it would threaten the retail banking model, the one that the ABA relies upon. Far from it, the most darning criticism was that it is a central bank digital currency. It implicates societal values and privacy. I don't know if they completely feel that way, but good job saying it out loud. A Federal Reserve central bank digital currency, often referred to as a digital dollar, would turn the Fed into the nation's near monopoly provider of currency, bank accounts, and payment services. But I'm pretty sure that's exactly what they want. They want everything to go through their clearinghouse because that's how greed works. The consequence, the Federal Reserve would quickly become politicized as the central control point for monitoring and potentially denying transactions. For controversial but logically regulated purchases such as those, a central bank digital currency would entangle the Federal Reserve as a national arbiter of social issues. I decided to talk about this because it was very logical. I did not assume that the American Bankers Association would ever say something like this, but I guess it's because I guess they all want the power, and everybody wants a slice of cake as opposed to just the Federal Reserve having it. I feel like we are heading in this direction. I don't think there's much we can do about it other than buying decentralized coins, because this is the fight that's going to ensue. Whether you see it or not, or whether you care about it or not, we are going to have a situation relatively near about the next 5 to 10 years, and this will only happen. This will formally, completely take shape if Bitcoin passes by $50,000 US. When Bitcoin hits that $1 trillion market cap, Bitcoin will be worth more than many different countries. We have companies on this planet who are worth more than countries, and they're valued at several billion. When Bitcoin hits $1 trillion, if not $1 trillion plus, that's going to be the point where we see a hyper acceleration of countries trying to make their central bank digital currencies, and they're going to have exclusive clearing houses through their central banks. All transactions will be followed, will be paid attention to. You won't be able to do anything in a private manner anymore. And that, I think, will also hopefully help to accelerate people towards Bitcoin. It's really a shame that people don't already get it. People simply rely on the actual numbers of Bitcoin's price and not the actual freedom that it will provide to many in the future. And say it with me. I mean, never mind. I was going to say it with me, but it's like an entire sentence. The entire idea of what Bitcoin is and the privacy and the freedom that it provides is only currently noticed by the rich, because the rich are used to this world, or want a world where they can transact amongst themselves or do whatever or buy whatever they want in a totally private manner. But this doesn't really relay to everyday average normal people. It means almost nothing to them. As long as they're getting their paycheck, they're totally fine. I can put food on my family's table and bada bing, bada boom. Not realizing that all of this wealth that we see in US dollars and euros and Japanese yen is being pushed into Bitcoin. And then when Bitcoin hits $1 trillion and becomes this super crazy mega currency, other people will want some, but the people who are already at the top of the economic food chain will simply just become digital, and they'll still hold their positions, while everyone else will go, oh gosh, I wish I had gotten into it before. It's a really crazy thing, but that's also going to be the point where governments realize that less people are using, like, think of the fight that we've had already. Multiple countries have banned Bitcoin, restricted it. You can't use it, you can't trade it, you can't hold it, you can't own it. You can't do this with cryptocurrencies, and they've been shutting down anything that looks relatively akin to a fiat currency that they themselves do not have control over. Imagine the future where tons of people begin to accumulate these coins, or these coins have actual private transactions and more people are accumulating Bitcoin and Ether. And imagine a world, this is also already happening, where more people are using Tether and other stable coins to transact as well. We had that news before, that there are countries around the world, people cross over the borders, and when they don't have a common currency, they've simply been using Tether to transact. This circumvents the US dollar. What happens when people circumvent the US dollar? I'm sure some of you said the word out loud. It's a 3-letter word. We've seen it a lot. Countries who decide to not use the US dollar openly get their faces punched in. And just imagine a digital currency. You get the idea. The point is, we are going to have a digital dollar sometime within this decade. It is going to happen. Just a matter of if people really start to pay attention. I don't understand how people really don't get all the stuff that's been happening in the last couple of years. Even banks have leaned heavily into Bitcoin. Why would banks be leaning heavily into something that's supposed to destroy them? It's because they know that the entire system is garbage and they've already kind of moved on. Anyway, that's news. Pay attention, because we're already here. We're not entering that phase anymore. We are here. Just a matter of them releasing these coins. Remember the news that we had a couple weeks ago when they were talking about sending out the stimulus checks. And they were talking about using a digital dollar. And I was like, I'm pretty sure they can't create a digital dollar in about 3 days. That must mean that it's already created. Let's move on. As always, a very special thank you to my Patreon supporters. Professor Wally from Gunbot University, Oscar Maldonado, Utopia 569, Yasha Harari, Moonman High, XRP, The Pothead, Joshua Vineyard, Martin Stoyer, Chongololo, Tsongololo, Nostromo, John Sars, Indiana Marita, Ebilbiophobia, Todd Mullis, Adam Gracig, Moher Maroni, Massive Ventures in Thailand, Jared Schneider, Wise 9, Owl 242 to the World, Crypto Joe, Bankroll Network, Adobo, Crypto Artist, Coldy 3D, Nicholas for North One Peace One Love, Damien Setsuna, Nick Kanaya, Richie Rich III, Vlad the Impaler, Paxis, Nick Mangialavoni, Anthony Charles, Jim Garner, Jeremy Fox, Minting Coins, Miller Hitch Test every day, and Cal Skips Leg Day. Yes to Crypto. Bodie Big Boatface, Anytime Fitness, Marsh Corner Staff, Arfmedic 17, Bake Me a Cake, Tigger, Macho Nisa on Crypto with Lano, Crayola Michelle, URL, Bolero Bastos. And hold on, I have to sneeze. Thank you all very, very much for your support. Thank you to everyone who is a member of the channel who clicked the little join button below. Thank you to everyone who is or has followed the new channel. Thank you to everyone who is a clicker of affiliate links. At the moment, Bitcoin went up, and now Bitcoin is going down. That's not a joke. That's just kind of how what's been happening the last couple of weeks. I assume Bitcoin is probably going to try to descend a little bit further. We're currently at $9,200 US per Bitcoin. A lot of the jumps that we've been seeing have been it's not interest rate farming. It's simply traders, day traders doing day trader work. These movements up and down provide very good returns, especially if you are trading with a good chunk of change. People are making very good money off of these movements. Binance coin is up, the winner, and currently coin number 9 from coin number 10 is Cardano. It is at 9 cents. It is on the cusp of 10 cents. I said this before. I said this is about a week ago. I said I assumed by the time we got news that Shelly was coming out, we would be around 10 cents. When Shelly actually hits on the 29th of this month, we should be around 15 cents. I want to say 14, 15 cents. And from there, if we continue that momentum and we start getting news that Cardano is having a whole bunch of partnerships, which I am going to assume they have in their back pocket and are waiting for the actual release of Shelly, that'll also push the price up a bit further. And by the time we get to, what was it, August? The 11th of August? Don't remember the exact number. When staking is then actually activated on the network, that should push us to roughly 20 cents. And if the rest of the market follows and we start getting that big jump up like we were expecting, that'll do it. Because right now it's a very optimistic movement. And that's because, Shelly's finally here. Chainlink is up. Lumens is up. Tron is up. Where were the other coins? Where's Compound? Compound's down. And I assume this has to do, and the trading volume is like 1/5 of what it previously was. I assume this has to do with the discussion that we just had as far as them lowering the interest rate, because everyone has kind of moved on to another coin. And you can tell if you're looking at the screen Balancer is up. Where are the other ones? There's another. Kyber Network is up. Synthetics is up. And Aave is also up as well. That's because people have already moved on to a brand new coin to try and get as much money as possible. Just watch out. These coins are going to be used for people to try and exclusively make as much money as they can in a short period of time. A lot of times, I will tell you with complete honesty, what a lot of people don't realize is that it's not just smaller fish who are throwing their money into the market. It's usually very rich people. We've had news articles like this before. There was some cryptocurrency trader a couple of months ago. He said he's making like 20 million a month, even with them as the market was going down, just figuring out how to trade. These people have tons of money to push into these coins. This is why sometimes they go from 80,000 in trading volume to 11 million and 19 million over the course of a day or two, because these people know how to pump markets and they know exactly when to cash out, how to cash out. And then when this market begins to go down, not saying that it's going to, but when it does, they push their money into something else, and that coin also ends up going up. And also, just logically, I know it's very enticing. Watch out for cryptocurrency tubers who are telling you that these coins are going to pump. Not this one, coins in particular are going to pump. How to get 1000x, how to get the most out of your money. I see the views on some of these videos as I scroll by. 45,000 views in a day, 28,000 views over 18 hours. And you watch the video and it's a mimic of 2017. And a lot of the coins they're telling you are going to pump don't pump. They own huge, massive amounts of these coins, and they're trying to get you to buy these coins so that they do pump, so that they do have 45,000 people trying to buy as much as possible. And then they end up selling. At that point, the next day, they make a brand new video telling you what's going to pump. And you then take your money out of that other thing that you made about 2% on, that they made 45% on. And then they tell you to start pumping that one. It's an exact mimic. And all we need right now is a Bitcoin move above 10,500. That'll spark an entire rally. These coins are going to go absolutely ballistic. I'm telling you right now, if Coinbase and BitMEX don't crash as Bitcoin is trying to go above 10,500, the market's going to go completely insane. When altcoins begin to really outperform Bitcoin, Bitcoin also begins to move up in value as well, because everybody also wants to make their money on the side as well. It's going to cause a huge frenzy in the market. Just make sure that you know what you're doing, where you're putting your money. And I'm telling you, we are going to have this discussion after a bull run, and people are going to be very angry. Stop following hype. Stop following other people who are telling you where to put your money so that you make them richer. It is so blatantly obvious, but a lot of people don't get it. Those things where people are telling other people, you give me 10 XRP, I'll give you 100 XRP. These things are thriving. They're popping up all over again, and people are... Anyway, just a word of caution for everyone. I know no one will listen because no one ever listens. I hope you all enjoyed. Hope you all are having a great day, a great morning, a great afternoon, or great evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Thank you all once again for watching and or listening, and I will most certainly be talking to you all soon. See you.